I just accepted a $300 loss, and I'm going to explain to you why, guys, so let's jump right into it. Welcome back, passive income investors alike. Today, I'm going to break down a position I just liquidated, and that is in Brookfield Realestate Services. If you've been watching this channel for a while, you'll know it is my least favorite stock of all time. It was one of my least favorite purchases for two reasons. If I show you the chart real quick and I throw this up, guys, you'll notice over the last little while, over this time period, you're going to see that the stock didn't do much but trend upwards. And I watched it for a very long time waiting for a dip and it never came. So I finally decided to pull the plug and I started buying between $17 and $20, giving me an average buy price of around $18. And I knew at this time that this company might be going through some troubles because the real estate market here in Canada had exploded, guys, in 2016 through to 2017. And I'm sure you know, if you live in Canada, houses cost an absurd amount of money, and you knew there was going to be some kind of a cooling period. Houses can't just keep going up and up and up, guys. And then all of a sudden people said, you know what, let's take a break here. Let's see what happens to housing. And all of a sudden home sales dropped by like 20 or 30%, like a huge amount. And Brookfield Realestate Services took a big punch. Now, why don't I like this company? I always refer to this as my least favorite company in my portfolio. Well, for two main reasons. The market cap, in my opinion, is pretty small, guys. When you're taking on small market caps, especially in the $100 million range, though that is an absurd amount of money to most people, $100 million in the investing world, guys, is chunk change. Like, it's non-existent. Like, you don't even exist on an S&P index. Like, you're probably not even part of an ETF. Like, it's such a small company. It's hiding under a rock. In Canada, though, Brookfield Realestate Services is really prominent. When you're driving around, you're going to see the companies they own selling real estate everywhere, like Royal Lee pages. You're going to see floating around, guys. I look at these guys selling homes. I see the homes they're selling. I drive by them on my way to the city every single week. But the sad reality comes with this company's books. This company's paying out, I think, more than they're actually bringing in. I think their payout ratio is... The company's balance sheet is a little rocky, guys. I'm going to throw this up here for you really quick because their debt to capital is a little out of whack. There's a lot of reasons I don't like this company. I'm not the biggest fan of their balance sheet. They've been quite consistent with their dividend, which has been nice. And if you go on to their website, they mainly try and focus on sustaining that dividend. But this is kind of one of these stocks that we would call a ticking time bomb, which just essentially means right now that they're going to have a hard time keeping up with this dividend in the long term, which means sooner or later this company could implode. I was down huge on this position not that long ago. I was actually posting about it on StockTwits, guys. You can follow me there as well if you'd like. Maybe I'll leave the link in the description below. But I was down huge. When this thing hit its bottom, guys, I was down like 15, 20% on this position, which really, really sucked. Not that it's a big deal, guys, because when you get involved in investing, you're going to take some losses. Not everything's going to be a win. And this is probably one of my least favorite companies, which means I need to revert it into a company I actually enjoy. When I look at my portfolio, I want to look at every stock and feel happy about owning that company. So I'm probably going to take some of the money that I sold from this, or probably most of it, and I'm going to put it into my favorite REIT, or my somewhat like a REIT, GEO Group, guys. GEO Group, the prison stock I talk about all the time. I love that company. It's got a great balance sheet. It's a staple to society. Again, if you own or if you ever looked at Brookfield Realestate Services, if you live in Canada here, you probably never even noticed it. It's not something I'm ever going to really recommend. Like I said, I took a $300 loss on it, guys, and I really want to find a place to put that money where I'm still getting a good dividend yield, because this company paid out a whopping 8% dividend yield and still currently does. But I just don't think it's sustainable, and every time I look at this company and I see the signs when I'm driving around, I don't get a good feeling about it for some reason, guys. And if it doesn't feel good in my gut, I can't hold on to it. So as I've been saying, I waited for it to rally back up. I didn't want to sell at a huge loss. So like any real investor, guys, don't get worried. Be patient. I know it's a company that's not going anywhere anytime soon. I didn't need to sell it at a massive loss, even though people on StockTwits were like, why would you hold it? It's such a loss. So I held on to it. It came back to the $16 $16 mark here, guys, where I finally decided to take only a $300 loss, which is not a whole lot of anything, to be honest. A $300 loss in the long term of what I'm going to be making on this portfolio is going to be absurdly non-existent. So I'm not going to worry too much about it. Now, GEO Group pays out a whopping 8% dividend yield. Their dividends fluctuate a lot, which, I mean, I can understand that, but I really like the fact that the government pays to fill the beds, and GEO Group is in a niche market where there's only one other competitor. If you look into the private prison space, guys, there are only two prison stocks, and it is not an easy barrier to entry. Aside from the government paying for it, there's always a group of people that unfortunately need to be detained, guys. It's a function of reality, and pretty much it's pretty easy to predict that as population goes up, crime rate will probably have somewhat of a percentage to that population rate, which means no matter what, we're going to need correctional institution, youth institution, mental health institutions, and I'm so glad that GEO Group is such a staple in society, especially in the US, and it has some global outreach as well. Though obviously that the other problems it may run into is if all these other countries or even the US changes the way they deal with correction. But at the same time, guys, this company has been around for 30 years and it is a proven thing. Even though a lot of people batter that prison stocks and the way these prisons are run are very inhumane, they're wrongly done. But a lot of the times when I go on the reviews for people that actually work for GEO Group, and that's something interesting you should do as well. If you've never actually looked into a company, guys, the first thing you might want to do is look up reviews, because people that actually work there write reviews about the company they work for. And GEO Group, a lot of the reviews are interesting because a lot of people are saying, well, look, a lot of the bad press actually isn't factual. A lot of the stuff you hear about going on in prison isn't actually what's going on in this company. I really like hearing that the employees enjoy their jobs, they're getting paid well, good benefits. There's just a lot of good vibes around this company, and with that really healthy dividend yield, guys, and that decent balance sheet, I think I'm going to take all of my funds from here and I'm going to build my position in GEO Group, which I currently have about $3,000 sitting in. Now, I am looking into some other REITs as well, guys. I really want to find some kind of real estate companies to add to my portfolio. It's something that I've had a hard time with in the past, and even today, guys, when I look at REITs. I do enjoy a couple of them. There's something called RioCan, which is one of the largest real estate companies in Canada, but they haven't had a lot of growth, and I'm looking for something that might be a little bit more aggressive in growth and something that I can trust will be around for a very long period of time. I am thinking about buying RioCan, but I would rather take on some higher risk investments and try and find something that's going to give me either a higher dividend yield or a higher growth rate, preferably something along the dividend yield line, guys. And I've been looking into a lot of like medical real estates or REITs, a lot of medical REITs, a lot of old age home retirement kind of REITs. Decided on what yet, because I haven't found anything that excites me as much as GEO Group does. This company, like I said, has been my least favorite stock in my entire portfolio, so I'm glad that it's gone, and it's been a learning lesson, and I'm just gonna get rid of that and never have to think about it again, guys. Let me know in the comment section below what your favorite REITs are, guys. I'm desperately looking around. I will let you know when I purchase GEO Group. I might do it today because it is in a little bit of the red, but I really want to see it take a bit of a dip, and I want to buy it below my current purchase price, guys. It'd be nice to see if I can get it just a little bit cheaper. So I'm going to wait patiently with this money in my account, and I'll let you know when I decide to purchase. Again, it might even be today, guys. I might just go ahead and put a buy order, and we'll see how I feel about it. But other than that, guys, stay cool. Slap a like on this if you enjoyed it. See me take some losses today. And I will see you probably later today. I'm going to make another video right now for you guys, so let's jump right into the next one.